Most people believe that once they buy health insurance, they're fully protected. They think the hard part is done. But for millions, the real danger starts after the policy is active. In 2022, a 38-year-old professional in the US had solid employer health insurance, premiums paid, no gaps. Then he needed emergency surgery after a sudden medical crisis. The hospital bill came to nearly $97,000. Insurance covered only a small part, not because of fraud, not because of missed payments, but because of one clause he never read. That clause exists in almost every health insurance policy. Most people don't even know its name. It's called out-of-network coverage, and it's one of the costliest traps. People assume if a hospital is in-network, everything inside it is covered. That assumption is wrong. Doctors inside the same hospital can be out-of-network. The surgeon, the anesthesiologist, or the radiologist reading your scans may not be in your network. Even during emergencies, this happens more often than people realize. When a provider is out of network, insurance companies don't have negotiated prices. That allows providers to charge whatever they want for their services. Insurance then decides what it considers reasonable. They pay that amount, and the rest becomes your responsibility. This is known as balance billing. For example, a doctor charges $8,000. Insurance decides $2,000 is reasonable and pays $500. You are legally responsible for the remaining $6,500. Many people assume emergencies are always fully covered. Sometimes they are, sometimes they aren't. Coverage depends on your plan, your state, and the specific service. In the US, laws like the No Surprises Act reduce this risk, but they don't eliminate it. Gaps still exist, depending on policy structure and provider contracts. In the UK, private health insurance has similar issues. Certain specialists, treatments, or facilities may fall outside approved coverage limits. The core problem is the same everywhere. People trust the word covered without understanding the conditions attached to that coverage. Insurance is not designed to eliminate risk. It's designed to price risk. The less you understand the policy, the more profitable it becomes for the insurer. Real protection starts with asking the right questions. Before planned procedures, confirm the facility is in-network and every provider involved is also covered. Yes, it feels uncomfortable to ask. Yes, it feels excessive. But that single step can prevent years of financial stress. Next, understand your out-of-pocket maximum. Many confuse it with deductibles. They are not the same, and mixing them up can be costly. Your deductible is what you pay before insurance contributes. Your out-of-pocket maximum is the most you should pay in a year for covered services. But here's the catch. Out-of-network charges often do not count toward that maximum. That means there may be no upper limit on your costs. Always read the summary of benefits. It's shorter, clearer, and more important than the full policy document most people never finish. Most financial disasters don't come from bad decisions. They come from assumptions. Assuming coverage means protection is one of the costliest. Insurance, credit, investing, and taxes all work the same way. They quietly reward people who understand the rules.